Alright fellas, welcome back once again. So this is the exact kind of price action which really reminds me of the fact that how you should not be really hodling in such kind of price action landscape altogether, right? We can see in the small time frames the price action really wants to revisit the lows, guys. And if we talk about the channel right here, we did we did literally bounce from this region right here. We had a good looking trade for a 5% leg to the upside all the way towards 41.5, and now we are retracing back down to the mean regions right here, guys. Now with this leg to the downside, most likely we do expand below this support line right here. Once again, most likely this is something what happens, guys. We're going to be obliterating some key levels, taking out all the stop losses, and then we might start getting back into the zone, and then we might attempt a leg to the upside once again, right? So that is what we are looking forward to in the small time frames. But essentially, guys, the thing is that these are the times when you should not let yourself lose in the market. What do I mean by that? I simply mean that if you're simply jumping into a long exposure in the market, just don't sleep with it, right? And essentially, guys, look, I do understand the feeling if you are trading in the market, right? If you are simply making money on every single day basis from these kind of markets, you should not let yourself hanging on to these overnight long positions, guys, because the overall landscape is kind of shitty, to be honest with you, right? Which is what is going on right now, guys. The thing is that the ultimate retracement that comes from these levels after the bear trap should take the price action all the way towards 46,000 at first. But look, guys, maybe we do have real chances on breaking this one down all the way towards 35,000 regions as well. This is something which is all the bears' wet dreams in the market, talking about $35,000 coming into fruition, right? But the thing is that the entire market is kind of postured for that move to the downside, guys. The thing is, 350 is inclined to the downside, and even if I talk about the 200 simple moving average right here, this one has started looking like shit as well. Well, not exactly like shit, but we can see that this one has started sloping to the downside. And guys, essentially this has not really happened a lot of times, literally since 2 years right here. You can see that ever since the Bitcoin's price started literally rising above $12,000, the 200 simple had a sharp incline to the upside all throughout this consolidation phase as well. But now we can simply see that the 350 is inclined to the downside, and the 200 is also kind of catching up, guys, which is why can't really expect a lot of breakouts and can't really expect a lot of long positions to succeed in the market altogether, guys. So limit your expectations and essentially try to follow up with these small time frame ranges, right? And alright guys, let's simply talk about the ranges right here. Let's get it off the channel as well. I'm going to be talking about the downside range as well right here, because this is the most significant part of this entire trending channel altogether, and this is the invalidation zone in the small time frames as well, guys. Now the price action getting rejected from 41,500 is not really that significant, honestly, which is why, guys, what I can expect, there are two scenarios. Number one, I simply talked about how the price action can obliterate these key levels and kind of back jump into these regions once again. But I think that the most probable scenario right here is going to be talking about an immediate bounce come from these levels and do something like this in the small to mid time frames, right? And finally testing this last range of breakdown, guys, which is $42,500 regions, guys. So the thing is that once again we are back into the shitty zone. We are simply back into the chop zone once again in the market. So we can expect a lot of chop once again, guys. We cannot expect straight down trends altogether, and we cannot expect straight up trends together as well right here. Essentially what I'm expecting in the coming days is that a simple sweep of the $42,500 regions and a retest of the resistance, or maybe a breakdown as well from these regions, and then we can talk about a further continuation leg to the downside, guys. But essentially, let's see what happens right here. This is going to be the key level of interest right here, guys, 42,500. And if the price action gets rejected from these levels, if you see that the price action on the daily is getting rejected right here, guys, that would simply mean that maybe you can be, well, short the fucking market with a lot of confidence altogether, guys, and then you can start targeting $33,000 altogether to the downside. But essentially expecting a breakdown right here from these levels is kind of like difficult, honestly, guys, because the market is simply choppy right here. Not much expectations, guys. Now from a completely trading perspective right here, I'm really not expecting Bitcoin to go for 25% moves to the downside in one single candle. It could happen, yes, it could certainly happen. That is something which we'll talk about in the coming video, guys. We'll talk about how the open interest is shaping out to be, and we'll see how the margin ratios are in the market as well. We'll talk about the open interest as well, guys, because that is something which can probably give us a little direction to the fact that maybe you could be breaking down, or maybe you could be simply chopping out sideways right here, right? Which is why, guys, this small little video was right here to remind you that don't be over bearish, don't be over bullish in the market. If you see some setups in the small time frames, just play them out. Just capitalize on the 5 to 6% moves and the ranges in the market. Do not get ahead of yourself. With that said, I'm going to be catching all of you pretty soon, guys. Bye for now.